and how we can go through those controls that we want to have. They gave me a full disclaimer, and quite frankly, they asked me to memorize it, and I was supposed to give you all of this by heart, but I couldn't, and this is really important, apparently, for the legal system. So I'm going to read it on the screen. And I want to clearly state that this session is for educational and informational purposes only, which it is, swear to you. And we will discuss real market examples, but only as the educational case studies. We are not recommending that anyone we're not recommending anyone to buy, sell, hold, enter, exit, or trade any financial instrument. And market involved risk. Trading can result in loss, and every trading decision should be based on your own research, your own strategy, your own risk tolerance, and proper risk management. This is the disclaimer that we have on our website as well. So please do remember that market conditions can change quickly, and any number or examples mentioned today for the educational discussions only and should not be treated as the instructions or predictions. So this is something that you need to be completely aware of. And after that, we're going to go through our best part. Today, I am joined by Michael Magda, our CMO at Oppo Finance, and he is the strategist in our system. Michael brings together experiences in the financial industry, market communications, traders' behavior, and strategic market thinking. And so today we will look at trading pressure from two sides. First, the psychological side, how traders make decisions under pressure. And the second is the educational market side, like how recent events, inflations, and data, Fed expectations, oil, gold, and the US dollars can influence market sentiments. And again, this is not about what to trade, it's about how to think. So, Michael, how are you?
Hi, Z. I'm doing great. I'm happy to be here on TikTok.
That's
Tiki-Talk.
interesting. Tiki-Talk, yeah. Initially, what's really interesting for me, I always, the moment that we were recording those videos, I was always saying that Tiki-Talk. And I was like, and the team was telling me that it's Tiki-Talk. And I was like, I don't get it. I'm pretty sure it's Tiki-Talk. And then they came up with this idea, no, this is the combination of Tiki-Talk, but we're going to talk about it. And then I realized, oh, that's so smart and that makes sense. So it's Tiki-Talk. Let's go with it. It's been a minute. How's everything? Where are you right now, Michael?
I'm in Athens. It's really nice around the summertime. Lot to see, lot to do. Enjoy Athens a lot. Yes, it has been a minute since we last met. And really happy to be here again. Enjoyed watching the World Cup this year. I think there was a lot of new teams that were
Yeah,
playing,
yeah.
and a lot of new faces and players came into the scene, which is kind of good. You can feel like the old is kind of phasing out and the new's starting to come in.
I see,
So it was an
exactly.
exciting World Cup for sure, indeed.
Super exciting, super exciting. Which team are you the fan of?
So, originally I was hoping for Jordan, given that
Of
I come
course.
from Jordan and from Mexico. So both kind of teams, nationalistic aspect kind of kicked in. But, they both didn't perform very well. And Jordan specifically against Argentina. So when Spain won, I was extremely happy to see the outcome because in a way I kind of got my vengeance on Argentina.
Of course, the enemy of my enemy is my friend.
Absolutely. Absolutely.
True, true, true. Michael, I'm going to ask you a question, and I would like
Sure.
to know your thoughts about it. Did you ever win or lose? Like, did you ever make structured decisions?
Well, of course, in trading, I have. Maybe in my life, not so much. No, I'm just kidding. Of course, the disciplined approach to trading is key. It's important. Concept we like to call mastery internally. Self mastery. We know that the markets are unpredictable, and having a structured process approach is the right way to do it. It's very complex. If we were to kind of unpack that is many things that work together many habits, many internal systems, the concept of, daily planning your trades, learning the specific setups, getting familiar with the asset classes, getting familiar with the trading emotions. These are all part of a successful system. Um, so to answer your question, yes, I've been part of a process. I usually classify my trades in four parts. I don't just look at P&L. I look at, setups that I thought would win and do well, but eventually the market had proven me wrong, and vice versa as well. I look at trades that the market, I got lucky in that trade, and just like a striker might accidentally hit the ball into the goal. It does happen in trading. These situations can happen, and it's important to kind of be able to see when that happens and reflect. And the concept of mastery is that, in my opinion, and it's the ability to kind of plan your trade, understand the emotional cues that took you to open and close that trade, and then, of course, it's management of risk. Risk is everything. And then towards the end, it's kind of analyzing your trades.
Great, great. That sounds really analytical, and I'm really here for that. Speaking of analytics and the way that you analyze your trades and the components that you are basically considering when you're analyzing, that sounds like a really tactical type of analytics. So I'm gonna ask you something. Let's go to this theme of tactical analysis desk. We have a theme, especially in OPPO, that we usually say that preparation beats reaction. And for this one, like for instance, let's go with this one. Michael, in football, great players. Oh, by the way, for our viewers, when I'm looking at this, because this is Michael's face for me, and like when I'm getting back to it, this is camera. So, excuse me if I'm like looking at Michael. But in football, great players are not only judged by how fast they move, right? And they're judged by awareness. They understand positioning, they understand timing, they know when to attract and when to wait. And trading requires a similar mindset. So let's connect this to a recent educational market example. After the latest US inflation data, gold reacted strongly, and many traders may have to move and felt pressure to act immediately. But for today's discussion, we are not asking whether someone should have traded gold or not, but we're asking a different question. When traders see a strong move after economic news, what should they understand before reacting?
Well, I think that question is very important, especially at the current time. I think there's a lot of fundamental news coming to the market, whether it's the Fed, whether the geopolitical tension that's driving the price of oil or specific currencies, whether it's the instability that's kind of happening, or the energy crisis or the shipping crisis. So there's so many signals out there, and it's hard to kind of keep your eye or to be able to track and to control your reaction. I would say, first, deal with what you know. This is not a opportunity that for you to go into a new territory, one that you're not familiar with, an asset class you're not familiar with. A good profitable trader usually understands the assets that they're trading very well, understands the historical data of similar events that have happened and what were the reactions. So since the topic is analysis here, I would say don't venture into new territory or new ideas for trading if you're not familiar with them. I would say practice what you know, the assets that you know, and the events that you have done the literature on prior to taking that specific trade. As you mentioned, the soccer player, that day maybe he's not feeling too well or she's not feeling too well. So we don't look at how they perform in a specific game. We look at how they perform in the whole series, in the whole World Cup. And traders have good days, traders have bad days, and a disciplined trader, I would say, is one that knows when not to trade, when to step out, when to stay flat, when to avoid getting into the market because there's too many unknowns, and this is out of the risk appetite to enter the trade.
True, true. Well intuited, quite frankly, because um, I completely understand, and a strong market move can create emotions, and those emotions can create urgency. And based on everything that you mentioned here, which I couldn't agree more, I think um, we should tell them that instead of asking only that, why is gold moving, traders should ask, what changed in the story behind the move, right?
Right, yeah, and the interesting thing right now is to see how which asset classes are moving alongside each other. That in itself could be also a false signal to some degree. People might think, oil's up, or oil is reacting in a specific way, and gold is reacting in a specific way. That these two are correlated with each other, and that I wouldn't say that might be right, that might be wrong. I would say here is to kind of see how historically they've performed with similar analysis, and maybe the picture takes time to clear up. The markets are still shaping. It's too early to make a decision. So I would wait for the picture to kind of get more clearer before jumping to such a big analysis of drawing a correlation in the market. And yeah.
Perfect, perfect. So I think if we're going to go through it, the first lesson is really clear here, right? The move is not the full match, and it is only one moment in a game. Before reacting, traders need to understand what created this, from the things that I comprehend from your conversation, and they need to understand what created this move, whether they're on process supports and any decisions at all, and they need to slow down a little bit before making any decisions or any mistakes. Better to say, this is something that I came up with, and I guess we can use that as kind of like first lesson. But when we are talking about all of these emotions, and when we are talking about the psychology behind every decisions that they're making or any aspects, I think that kind of throw us in the second concept or the theme that we can discuss through, which personally one of is literally one of my favorite type of topics. It's economical behavior, and this is going to be called psychological pitfalls when emotions change the game. And in the past years, I studied so much through this concept, that how our emotions basically change the way that we are trading. Because one huge belief that I have in the markets is that markets are completely unpredictable. And that's the beauty of the market. Because if the markets were completely predictable and we were able to predict in the entire market, we wouldn't have the market anyway. And it was going to be something like a machine. So we need to accept this idea that markets are completely unpredictable. But what is predictable and what makes this game in our favor and make it so much fun is that, contrary to markets, human behavior or human psychology is completely predictable. You can predict what going to be the next move of yours, of the other person, and what we're exactly doing here, because human brain has that type of pattern. And by understanding our patterns, by understanding the way that we're going through emotions and seeing those patterns as informations, not as losses, not as gains, and we're going to studying that perfectly, we're going to completely understand what is happening here. We went through the educational side so much. I still want to have this session relevant to football. So, if I'm going to connect this information and this concept to football, I'm going to be like, every football tournament has its emotional moments, because it's all about a game, and you never know what's going to happen in football. How every player is working and how they are going to perform, but everything is going to be a case of probability. So you can see a missed chance, a mistake, a comeback, a decision made too quickly because the players got too emotional. And sometimes one emotional moment can change the entire match. And I've seen it so many times as a football fan. So recently, the US dollar moved after a soft inflation data and changed how markets viewed the timing of potential Fed action. Again, this is not a signal and this is not a direction for our users and for our viewers, but it is useful. It is such a useful case study. So when traders see the dollar move after a major data, they can feel the pressure. I felt the pressure personally, and they may feel they have to do something immediately because that creates the sense of emergency for them. And I want to ask you, Michael, why
Mhm.
do these moments, I'm speaking a little bit slower because I'm trying to put the words in a really right sentence. Why do these moments become psychologically dangerous?
Um, well, and of course, in the trading perspective, there are common emotions, and these emotions are actually labeled and we know them. One definitely being greed, and we see that in specific setups when a position is moving in our favor and we don't know when to close it, and we wait for it to kind of keep moving in the positive direction or the direction of the trade. And eventually, the market reverses very quickly and we stop out before actually being able to collect. So, greed is a very important emotion that we kind of need to look at. And obviously, when it comes to football, fans want their teams to win every single game and their
Yeah,
striker to get as many goals. So it's natural, it's a human instinct. Greed is part of everything that we do. And the ability to control that greed is what would make a master trader or a trader a disciplined one. The other one is definitely FOMO. You mentioned earlier, the specific reaction in the market. If this is something that I'm
true.
not familiar to, it could lead to FOMO. It could lead to me wanting to participate in something that I don't know. And just because, the Telegram and the Slack channels and X is people talking about the specific trade, I might actually feel inclined to go into something that I don't know, which could lead to some sort of loss, of course, because I'm going in uncharted territory. And I think for a football fan, that would be missing watching your favorite game or
Correct,
missing the
yeah.
goal that you could see, or being in the stadium and watching it live. Especially, I'm sure that is a remarkable experience. Um, the
Definitely.
other emo- the other emotion I would say is just having too much hope. Sometimes traders are not skeptical enough about a specific asset class. They think that they can predict uh, what's going to happen, and they feel like things are going to go. Uh, I think this is a very dangerous emotion to have. Um, you have to always be skeptical. You have to also always do the extra research required, the back testing, before getting into a trade. And as I mentioned earlier, it's not about the volume of trading or frequency of trading. It's about having a good trade. And there's a book
True.
about this, the One Good Trade, I think that's called, by Mike something. Um, and he talks about, it's not really about the numbers. And his story was fantastic. I think they managed a proprietary firm and their story was all about it. And he would sit down at the end of the day with all their traders and he'd have their trades recorded and they would sit down and discuss with each one of them, why did you take this trade? What was the reason behind it? What was your entry strategy? What was your exit strategy? Uh, why did you set the stop loss here? And he would really dive deep into the psychology of why a trader went and opened that specific trade. He's not looking for the technical analysis here. He's looking for the
Right.
emotional cues that force the trader to open and close a position.
I get it.
And that in itself was, a very powerful way to kind of audit or review your emotions when trading.
Great, great. So you mean that every emotional decision can create the next emotional decisions, right?
Absolutely, absolutely. And the market conditions can create emotional decisions. A game and a match, a soccer match, is different the first 10 minutes than it is the last 60 minutes. There's a
Right.
time factor to it. I mean, in the FX market, it's slightly different because time is always there. But for example, in other asset classes like the stock market, when the market opens, when the UK market opens, when the US market opens, these are kind of different conditions that impact people's emotions. Like the Fed announcement next week will create a reaction in the market. That will strike an emotion. And at the same time, in a trade itself, uh, is my trade reacting? Is my setup reacting to my analysis? Is the trade going in my direction? If it isn't, there's an emotional element to that. And if for any reason, my setup was correct, but the market did not act in my favor, and I had a losing position, and I had a series of losing positions, how would I start trading then? At some point, maybe revenge trading kicks in, where I want to try and
Right.
recover my daily target, and that's kind of an issue as well. It's about really knowing when these emotions trigger, and how to anticipate and react to them. And the market condition is one. The same way that a soccer game is another condition. The opposing team scores a goal, the team starts to become more defensive, or there's 5 minutes left in the game, so they'll chances are everyone's playing on the offensive front to try and recover the game. So it's very similar in that sense to an emotion to a soccer game.
Well explained. Yeah, yeah, exactly. Just to, you know, go through the complementation of all of your ideas through this entire process, which I completely agree. I feel like that traders might say that like, oh, the market caused the loss, or like, you know, um, what should I do with it? Or like, what was the emotion that I made? But based on the experience that we had in the past years when we were going through all of this new concept of the emotional trading and also the psychological behavioral economic part, the idea here is that the best questions that you can ask is to be like, how did I respond? Or did I follow my plans? Did I respect my risk? Or did I wait for confirmation? Or did I understand the market context? And these are going to be the really best questions that a trader can ask themselves. And I feel like that if you're going to ask the right questions, it really doesn't matter what type of answers you're going to receive. Every answer is going to be the right answer because that only is specifically about you. So the key takeaway here is that when the market moves fast, traders should not only manage the trade, they should also manage themselves. Managing yourself is going to be the very best, takeaway that we're going to get the entire concept of trading.
Absolutely, absolutely. Self
Perfect.
mastery.
Exactly, exactly. This is the most important part. While we were discussing this matter with together, I am getting a lot of comments and a lot of questions that are coming in our live. And don't worry about anything. After we finished the discussions and we went through each and every topic thoroughly, and we had this really detailed discussions about the topics that we planned for, I'm going to ask the most common questions. I'm going to check all of the questions, and my team is going to send it to me as well. And then I will ask your questions from Michael as well. Our viewers really like you, Michael. They're actually super curious about it. Initially, I was like, oh, okay, okay. I see 1, 2, 3, and then right now everyone were coming up. So let's go to the second one. We have a segment, and that segment was the World Cup market flashbacks. I don't know if we went through it as well, because based on the planning that we had, we were going to have some flashbacks, and our team is going to help you with that. But okay, I'm going to continue. Michael, we talked about reviewing decisions after the results. And that is exactly what analysts do after every major match. And they do not only look at the final score, and they go back and usually ask what changed the game, which decision created the pressure, and which moment shifted to the momentum. So, to look back at some World Cup moments and the lessons traders can take from them, let's move to our World Cup market flashback. I guess the team needs to show a flashback right now. If it's possible, yeah. If it's not possible, I can continue talking. We're on a flashback. Beautiful.
Thank you, Yassi. Let's take a quick World Cup detour. November 22, 2022. Saudi Arabia played Argentina in the group stage of the World Cup. Argentina had Messi. Most people expected a normal Argentina win, but football had other plans. Saudi Arabia came back and won 2-1, creating one of the biggest shocks of the tournament. Now, here is the interesting part for us as market people. On the Saudi side, this was not just a football win, it became a national celebration. The next day was declared a public holiday, and even the Saudi stock market was closed. But on the Argentina side, one specific chart told a very different story. After the loss, Argentina's fan token dropped sharply, so one match created two completely different reactions. In Saudi Arabia, the market closed for celebration. On the Argentina side, the fan token chart turned red. And this is where football and market start to look more connected than we think. Because markets are not only about numbers, they're also about attention, emotion, and sentiment. Another example happened just a few days later. On November 30, 2022, Argentina played Poland and won 2-0. On the same day, traders had another major headline on their screen. Jeremy Powell spoke about the Federal Reserve and signaled that the pace of interest rate hikes could slow down. Wall Street reacted strongly. So on one screen, football fans were watching Argentina fight to stay alive in the World Cup. On another screen, traders were watching the Federal shape the market expectations. Two completely different worlds, but both competing for attention on the same day. And then we have one of the most iconic examples from 2014, Brazil versus Germany, the famous 7-1. Brazil was playing at home in a World Cup hosted by Brazil. The country was shocked, fans were crying, but the market reaction was not what many people might expect. Brazil's stock market moved higher after that defeat. One interpretation is that investors were not only looking at football, they were looking at politics. They seemed to read that painful national defeat as a possible hit to the popularity of the government at the time. So, while fans were reacting emotionally, the market was pricing a different story. And that is a lesson here. A football match does not always move the market directly, but major global moments can shift attention, emotion, confidence, and expectations. Sometimes the chart reacts to the event, sometimes it reacts to the story behind the event, and sometimes it reacts to what that event means for politics, policy, or public sentiment. That is why, as traders, we do not only watch the candles, we watch the world around the candles.
We're on air. Thank you so much for the analysis. Looking back at those moments, we can see that the final result is only on the last part of the story, and the real story is in the decisions before the results. That is also how markets work, but by the time we see the final candle, many expectations, reactions, and decisions may have already shaped the move. So now let's bring back the idea into the trading room, right? So bring back the idea to the trading room. That kind of reminds me of like a really good topic, the locker room. It's also in the trading room and the locker room. This concept is going to be about the real stories behind the decisions. And we're going to have a theme about what happens behind every trade. So now let's move to the locker room, okay? This is where we talk about what happens behind decisions, no slides, no perfect theory, and just a real pressure traders may feel and may face when the market reacts to the unexpected news, right? So Michael, let's use a current educational example. Oil prices have recently been affected by renewed geopolitical tension and concerns around major shipping routes. And we're not discussing this to the market trading call on oil, by the way, another topic that I need to
Disclaimer
mention.
there.
Exactly, this is disclaimer. But we are using it as a case study, in case study only, but because oil is not the only oil story. Every prices can influence how market participants think about inflation, central banks, currencies, gold, and risk sentiments. Where a real world event like this enters the market, I'm going to ask you this one, Michael. What usually happens to trader psychology?
Well, I mean, I'm going to go back to FOMO here. So if somebody's not really participating in these markets, they would be inclined to want to participate in these markets. So the curiosity would increase. And, we would see new traders start trading gold or oil in that sense, and getting more familiar and learning a little bit more about these asset classes for the first time. So it's kind of a new way for them to get into it. That's one thing to look at it. Also, it will create a lot of emotional cues to start trading gold, especially because gold is very stable. And it has this concept of stability. I mean, again, disclaimer, but it has this concept that gold is very stable, it moves very slow, and it encourages people to kind of park their money there versus kind of not knowing what to do. So it's kind of a safe haven in some trades, but also that could be risky, and that's why people should practice proper risk management at all times.
True.
Because there could be a panic sell. The condition again is still forming. Markets are shaping, not necessarily this is the final outcome. With oil as well, the story has been very unstable. The geopolitical situation has been very unstable. We really cannot predict where it's going to go. There are many markets here involved, not just the FX market, the futures market, the options market. So many, markets are kind of involved into driving the influence of the shaping of the market. So we have to be cautious. We have to go back to what we know and to kind of discipline ourselves to slow it down, as you said earlier, to analyze and to kind of get into what we know. So try to avoid FOMO. And if you're in a good position, stick to your plan, I would say. If you open a position, if you decide to go into it, make sure you set your stop loss correctly. Stop loss is there to kind of help you in case there's a fast reversal, and recognize profit at the right time. Once you set your entry, make sure you set your exit, whether it's a take profit or a stop loss. And once you take profit, celebrate it. Don't get back into the market immediately, which could happen. Don't feel like you still have to catch up. Look at it in the same way a team would look at these things in a locker room. Try to go for easy, quick wins, slam dunks if we were playing basketball. Ones that kind of can ensure you have more winning trades than losing trades in a day. And the size of the trade really doesn't matter, just because the market condition changed and is more favorable. And this is an emotion that people will have. They're going to go back to greed. They're going to want to open bigger position sizes. They're going to want to take on more risk just because they think that the market is in their favor. This is where caution should be practiced.
Correct. It's all about traders' process of thinking, and I couldn't agree more. Usually, when because I've been around really seasoned traders and also some newbies, but one thing that I learned from those disciplined traders was that they usually ask, what exactly changed? Or is this an energy supply concern? Or is this an inflation concern? Is this a safe haven reaction? Or maybe has the market already reacted? What would make the idea invalid? Those type of questions. And I've learned a lot from them. But so the same headline can lead to completely different decisions depending on the trader's process, right?
Right.
Perfect. So, based on this conversation, I think two traders can read the same headline, but one reacts emotionally because they feel pressure, and the other one builds a scenario. For example, when oil rises because of the supply road concerns, a trader should not only think about oil, they should think about possible second effects, like how could this affect inflation expectations? How could this affect Fed expectations? How could this influence the dollar? How could this change the way traders interpret gold? And it means they understand that markets are connected. I think this is the case. So that is an important distinction. And we're not saying that this happened, so trade did that, and trade this or trade that. We're just saying that this happened. So understand the chain reaction. In football terms, don't only watch the player with the ball, watch the whole field. This is exactly the case that we're going through. I guess you had a lot of comments on that, Michael.
I like that. I like that last
Yeah,
bit. That was really good. And yeah, you're right. A newbie trader might feel more FOMO than a seasoned trader here. A seasoned trader would know
exactly.
what to do, would know not to touch this if it's not in their asset class of choice. A seasoned trader would be cautious in these time and would wait to get a clearer signal, the setup that they're looking for. A newbie trader might rush into the trade, and that's something that we should will end up usually, or in most times, in some sort of loss. So yeah, and I agree with you. There's a lot of things that might move together. The impact on wheat, impact on commodities. All markets are to some degree connected, and especially in geopolitical tension. The whole shipping industry is being rerouted. So it's not just oil. It's people reacting to the price of oil, looking for a safe haven, considering gold for that. Trading currencies might change, so people might trade in different currencies now, because the liquidity might be a specific issue to some markets. So it's really important to kind of reflect and always think. I think that I like that approach, to always think what seasoned traders would do and what newbie traders would do, because this is kind of a two-sided market. A trade is, you know you're always connected with somebody else who's going to buy or sell your position, so you need to anticipate what other people would do.
Exactly. No. I completely get it. Um, Beginners often focus only on the immediate move, and the experienced traders focus on the context. That's what I always, uh, you know, trying to have in mind. Always, it's not only about trading. It's not only about the moving. It's all about the game, and basically the entire life can be a game. So let's quickly get to the conclusion of this part. The locker room lesson is going to be: do not only react to headlines, understand the chain reaction, because in trading, the first move is not always the best move. Perfect, well intuited. I'm learning the lessons. I'm really good at learning. um, okay, right now we're in the locker room. The next
Right.
one, if you're going to follow the flow of the game, the half the half part of the game has finished. Right now we're on the second half, and we're in the mid game. And let's say that this is going to be the mid game adjustments as well. In a very first half, we made some mistakes, we did some stuff, and right now this is the time to sit with the idea. We're going to understand, we're going to have like a really self-awareness type of conversation with ourselves, asking right questions. This time we need to do the adjustments, and the entire team, like basically, let's say that like the entire idea of this case is going to be adapting when the game changes. And for this one, I have a lot of good things, like because I can connect it to the football as well. In football, great teams do not only play the entire match with only one plan, right? So they adjust. if the opponent changed the formation, how they should respond. If the pressure increases, they need to adapt. And if the original plan stops working, they are not defending this emotionally. Trading requires the same flexibility, as far as I know. So let's connect this to the current market environment. On one side, recent US inflation data came in softer, right? And on the other side, oil and geopolitical risk have created new uncertainty around inflation expectations. So traders are looking at mixed signals. Softer inflation data, but possible energy related inflation pressure. And this is really confusing, even for myself as well, because it's been a long time that I didn't do trading, but it is really confusing. So I'm going to ask you, Michael, when the market gives mixed signals like this, how should traders think?
Well, they should be definitely be curious about what's happening, and they should kind of avoid definitely getting to something they don't know. Uncertainty is something that should be managed. They should get more familiar. They should analyze more, and they should choose. If this is unfamiliar territory, I should probably not be trading. I should be learning. So switching on my analysis hat versus my, getting into the trade. So I would say, be curious about the market, be curious about what other traders are doing. This is a learning opportunity, not necessarily a trading opportunity. Avoid FOMO. And if you do decide to venture, make sure your risk is calculated. Take smaller risk, learn from the market. And I would say, don't be afraid to, test things on your paper trading account. I feel like a paper trading account isn't just to get familiar with, where to click or how to open a position, all of that. It's perfectly designed for these type of environments. A demo account. This is where you can potentially come up with a thesis of what you think the market will do, and you can validate it in a safe place. So risk management is key. Curiosity is another one, and I would say this is a learning opportunity. Try to learn from it, and if the trade doesn't feel right, stop this one out. Sit on the bench.
Exactly. Oh, that was really nice. I like that. I like that. Let's say that like traders should avoid becoming emotionally attached to one simple story, right? So that simple story might be inflation is softer, so one asset must move to the one direction. They usually have this linear type of ideas. And oil is higher, so another asset must move to other direction or something like that. I'm going to ask you a follow-up question. What would those scenarios sound like in a simple educational way for like a newbie, like a novice trader like me, the one who doesn't know?
So look at the oil today. Like the common logic would tell you that oil prices should be disrupted. That there's going to be oil shortages, and eventually the price is going to obviously increase. This is a geopolitical tension. The Straits of Hormuz is closed, so the oil supply is going to be disrupted. Reserves are going to be running that low. So common logic would say that the market is going to move in this direction, but you're dealing with a large population of people who are making small decisions very quickly that could potentially influence each other. They're looking at an order book, they're looking at buying pressure, and if for any reason they see a panic, the market could reverse very quickly in that sense, and only for a few hours, not necessarily reverse. Maybe the trend is you know on a day chart versus an hourly chart or a 15-minute chart. So it's important to also, when you plan your trade, to kind of decide which chart you're going to be trading on. Am I trading on the 15 minutes? Am I trading on the 1 hour? Am I trading on the 4 hour? Because these type of reactions could be influenced, and we do see it in the market. A panic sell almost happens every day, and with every piece of information that comes out, when a story is still being shaped, like a geopolitical tension, it could influence the market in, a positive or a negative way. And I would also say, don't only look for one type of setup.
Mm-hmm.
This is the idea of learning new setups. Different markets react in different ways. So another opportunity to learn how to trade new setups that you might not be comfortable with. So most profitable traders trade, the same setup over and over. And in these situations, you might look for a different type of setup. But again,
Correct.
the literature is important here.
Yeah, of course, indeed, indeed. It is really important. Following up your thoughts, other theme or other way of reviewing this matter kind of reminds me of um, understanding how we need to plan this entire stuff. This is a really interesting matter. It's not coming from trading, but when you study the life of so many great entrepreneurs, traders, and so many great people who are in this financial markets or like basically taking care of a lot of things, you realize that the most successful ones were always looking for inverse decision making, if I'm saying it correct, because Charlie Munger used to take care of this idea, Elon Musk used to take care of this idea. So adding this question to your thoughts, I think that would complement this entire theme. That like what a trader, I think what a trader should ask all the time is that what would prove my idea wrong? Because this is exactly the stress testing that you're doing on your topics. You always need to understand that what's going to be the best case scenario, what going to be your goal, and after when you understand the goal, you need to go all the way back to how this entire thing could go wrong and how come it is going to be possible that I made a mistake. Or of course the goal is going to be really great, but like what is in it for me? Because usually the most common questions and important one as well when traders are asking is that how much can I make? But a disciplined trader can also ask that where am I wrong, or what would invalidate my view, or how much risk am I taking? Am I reacting emotionally or following the process? And that question protects the traders emotionally and financially, because it's not only about trading, it's about life. And I've implemented this strategy not really long ago, but I'm still working on it. It's really hard to control your emotions, but this is something that is definitely going to help everyone through making right decisions. So basically, if the market tests your idea and you need a plan, you're going to find your answer with this one. So you are going to get a right decision, not a reaction. And I think this connects perfectly to the football theme. A coach does not wait until the final whistle to realize the plan, and if it's not working or working, they watch the match from outside without any tension, before any breath to get out, and they always have that taste of fresh breath. They say it, and they always see the match without any emotions. They see it from outside, and they read the pressure and they adjust. So yeah, I guess that's going to be the case.
I want to build on your analogy. I definitely think the coach is the trader and the equation, and each player is an idea for a trade. You know,
Correct.
whether he's the striker or she's the striker, or the person in the middle, or the defender or the goalkeeper. Each one of them play on a specific tactic to potentially develop a winning trade. And the coach needs, as you said, needs to look at things from a game perspective. Where are we in this specific game? And I would say the game is the position that is open today. And this is the market. It could react differently. There's an element of luck. There's an element of skill. There's an element, so many conditions happening. At the same time, I need to zoom out and look at the league. How are we performing this
Correct.
league?
Yes,
who
exactly.
who are we playing against? And from a trading perspective, that's kind of my portfolio. I'm looking at how my portfolio is doing. There's a lot of emotional elements there. You know, if I'm winning 6, 7 trades today, and I've already hit my daily target for the day, my last trade, will be influenced. Would I open a larger
Correct.
position? Would I open a smaller position? Am I looking for an extra win, or am I looking just to hit my financial target for that day? So these are decisions that coaches would be making. So, how much do I want to risk this game? There's a risk for every player. A player could get injured, player, and if the opposing team, for example, um, is one that is statistically inferior and is not performing as well in this league, I don't want to obviously put my best players on the pitch. I want to kind of preserve them for a more challenging game, and this is kind of the same in trading. If the
Hmm.
market is not very fundamental in nature, it's more, there's not a lot of signals. I want to do the things that I know will work, you know, the easy setups, the quick wins, the slam dunks. If I, going into a more challenging market, that's when I kind of want to leverage my best players, my best tactics. And I always need to know what the scoreboard is saying. And it's also the same when it comes to trading. I need to look at my day trades. How many have I lost? How many have I won? What's my, total profit? And I believe there's a lot of tools today
Hmm.
to help a trader while they're in that, to kind of zoom out and look at their portfolio performance and not just necessarily focus on the trade.
What a great point. What a great point. We're going to get back to those tools because we have a huge surprise for our users. But for the closure of this session, I think this extra time, the second time kind of that we're talking about, gives us one of the most important lessons of the session, that the goal is not to be right all the time. The goal is to respond with discipline, and that discipline needs to be there when the market changes. So it doesn't matter how the market is going to change, you need to have that discipline and stick to that discipline as far as you can. Getting back to those goals, and also those utilities that you mentioned, since there are a lot of utilities on the market, Oppo came up with these utilities, and we have a lot of good news for our users, and especially for the people who are inside the market. They might not be our users, but this is something that we decided that we need to provide for everyone, because most of the people who are working Oppo are traders themselves. We are a lot of young people. You already know you're part of Oppo. I'm just saying for our users and like for the traders who are seeing this session. A lot of us are traders, and a lot of us are young traders. We are lost like everyone. We have our own emotions, and some of us are like novice traders like me. Some of the others are seasoned traders. They go through a lot of things, and we really need, we came to this idea that we really need those tools to give us this perspective, to look at this entire playground, look at this entire ecosystem from outside, from a wide angle, to understand this coach perspective. So we wanted to have this in a perfect ecosystem, in some tools and utilities that going to enable us not to, it's not a signal. We're not going to get the signals. We're not going to be told that what we should do or what we should not do, because at the end of the day, the entire sweetness of the game is the decisions and the control that you have on your own game, and the control that you have on your own type of decisions you're making. But I definitely going to enjoy this presence of a coach behind me who tells me that, hey, be aware of that. You've done it before, but like you should be careful to not to do it again. Or I would like to have these analytics of every decisions that I'm making, every trade that I'm going through, and a lot of stuff. And especially with this new, let's say, inference of this, technology and intervening the market with AI, we needed to connect some lands, we needed to connect some worlds. together, and we have a lot of good things coming through. And but this is something super big, and this is a huge secret. I'm not even sure that like I was allowed to say this on the camera, but I said it. It is what it is. It's live. But be aware that we're going to showcase a little bit on the exhibition that we're going to have on Forex Expo Dubai. We decided to go a little bit live. We're going to a little bit go through the staging on the website and our application, only for the people who are going to follow us through that exhibition and the audience for that exhibition on the Forex Expo. And by the end of the year, we're definitely going to show you what we were cooking so far. I'm super excited, and I was super excited that I couldn't keep my mouth shut. But yeah. Michael, you know everything. That's why you're not surprised by it.
I'm
Yeah.
biting my tongue right now. But,
Exactly. So
right.
no biting, no biting your tongue anymore because I said it. I took
Okay. Okay. So yeah. I mean, we're really developing some cool
Oh my God.
trading tech.
Exactly.
It's in an R&D mode right now. It's in the finessing stage. We really want to focus on the trading journey people go through. It's a lonely world in the trading space, but
It
we're here to
is.
kind of help you and to work with you as a coach. So more to come on that. I don't want to reveal too much, Yazi,
Exactly. Yeah.
but stay tuned.
Stay tuned. Stay tuned. This is a new era. This is the best thing that I can say. It's going to be a new era, not only for Oppo and its users, but for everyone in the market. And that definitely going to shape the way how we're going to see trading, how we're going to see our emotions, and how this entire economy is going forward. And yeah, let's stop oversharing. I usually get this comment that I'm suffering from TMI, too much information. Let's finish. Let's get to the wrap up of the conversation because we promised everyone that it's going to be 1 hour. Let's go to the final whistle because the match is ending as well, and we only going to have like 90 minutes. That's something that I came up with by myself. I don't know why. They told me it's going to be 1 hour, but I'm going to say it's going to be 90 minutes to connect it to the football, and I think I can buy some time for the 90 minutes. We cannot? You gotta be kidding. Okay, I'm going to take it faster. Today, this is so messed up. I thought I have some leverage in this system. Apparently, I don't. Okay, today we looked beyond the scoreline. We started with psychology, why traders chase moves, why pressure creates mistakes, why one emotional reaction can lead to the next, and then when we look at the real markets as the educational cases and studies, we saw the latest US inflation data, the shift in market expectations around the Fed, and God's reaction. Did I say God? No, I meant gold. Because
Gold.
you guys are literally, because this guy are literally forcing me. You're distracting me. Okay, gold's reaction to changing expectations. The marketing team needs to take it a little bit easier on me. Tell your team to make it a little bit easier on me, Michael. Old's movement during geopolitical uncertainty and the way one event can affect multiple markets at the same time. But the message is not trade this, trade that. The message is understand the context, review your decisions, manage your risk, and do not let pressure, make that decisions for you. And the World Cup ended, so the excuses, no more match to watch, no more, returns of the focus. And right now you need to focus on your own game. And let's say that this is your decision, your discipline, and your process. I think this is going to be the final whistle that I can have on this game. Michael, can you give me your final whistle?
Absolutely. Yeah. I mean, a soccer player trains or a football player trains, excessively. A lot of training, I would also say, Basketball players, Michael Jordan has spent a lot of time, shooting the
Yeah,
same, um, going for the same layup as well. So it's important to kind of skill build, hone down those skills. This is the time to do that. This is the time to kind of see the market from a different perspective and see how you kind of emotionally trade. Always ask yourself, the fundamentals. Always go back to your discipline. Focus on the journey. The only constant here is really you and the
hmm
way you behave. So make that a habit, turn it into a lifestyle, develop a plan, start small, I would say. One layer at a time is key. One asset class, keep it simple, try to isolate the things that could go wrong. And don't underestimate the power of journaling your trades. That has a
exactly.
significant, powerful impact on how you become and how you improve your trading. And
Correct,
good luck
correct.
with everyone.
Good luck with everyone. Good luck with all of us. Thank you so much, Michael. I'm going to do another begging from the marketing team, the director. Do we have a little bit of time to just come up with the questions of our users? Five, 5 minutes. Thank God. Oh my God. Did you say anything to your team, Michael? Okay, as a reminder, just as a reminder, this session was for educational and informational purposes only, and we do not tell anyone to trade this, trade that, keep this, lose that, and please do your own researches, understand the risks, and make decisions based on your own strategy and risk tolerance. And the reply of today's live session will be available tomorrow on YouTube. Bear that in mind, just in case if they're going to shut me off. I'm going to ask the questions, the common questions that we've been having so far. Oh my God, we have actually a lot of questions. Okay, the very first question that everyone asked was that how do you tell patients apart from just being scared to enter? That is so smart.
That is a very good question. That is a very
Yeah,
good question. I think the fear of so patience usually means that you're looking for a specific setup
right.
and you're waiting for it to happen in the market. I think if I was to decide what the other one would be, the fear is that specific condition has happened, but you're unable to see it because of your emotions.
True.
Um, so this is kind of how I would draw the line between both of them. Uh, if you're nervous, if you're anxious, it's usually fear-based decision or the lack of knowledge of what setup am I looking for. If you know your setup, you'll be able to see it when it happens.
hmm
Um, and that's the difference. It's patience is knowing what you're looking for and waiting for it to happen. It might not happen, and it does happen sometimes in the day where the specific setup you're looking for never happens, and it's normal for that to happen. But statistically, this is where backtesting helps, being able to see the frequency of these types of setup and being familiar, putting data on your side. Let data be your ally, your edge in the market, kind of understanding how that has worked in the past.
hmm
So I would say fear is just avoiding. Fear sometimes is masked as patience, and it's usually wrapped in a lot of emotions, anxious emotions that stop you from taking a trade.
Correct, correct. It's always really different. For me, fear concludes to procrastination, and patience is that you're just waiting for it to hover. That's the most important part that I learned. Let's go to one of my favorite questions, and that one was that how can I cannot find it right now. A lot of people ask that, but when I was seeing the notifications, oh no, okay, I find it. How do how do pros reset after a bad decision, like a halftime thing?
Well, here's the good news where trading is slightly different than a halftime. At halftime, the players have to play. A trader can choose not to play. If
Exactly.
you're having a bad day, going back to your plan is very important. That strategy we discussed, your portfolio, where you are in that position. If you're, if you lost your first trade, take some time out, kind of think about it, try again. But when you set your daily plan, you will decide how much you're willing to lose that for that specific day. And if you're close to that number, I would say just walk away from the trading desk and avoid trading for the rest of the day. So it really goes back to your plan and how much you are willing to be able to continue. So, the first loss is different than the second loss. And if you see it, for example, I stopped trading when I hit 3 losses in a row.
Exactly.
That to me is a cue to sort of take a day off. If I have 2 losing trades and then a winning trade, and then that is kind of motive for me to keep going a bit further. If generally I hit the amount of target of the amount I'm willing to lose, the maximum capped amount I'm willing to lose for the day, I also will take some time off. You
Exactly.
can always start over the next day or even the day after. So don't worry to kind of do that.
True. I remember this exact sentence from Daniel Kahneman's book, Thinking Fast and Slow. You know that he won the Nobel Prize for the behavioral economics. This is the very first person who won this Nobel Prize as like a psychologist. He was saying exactly this matter, that when you are thinking yourself as a pro trader, you also need to consider this idea that this is something that happens every day. So your wins and your loss, you need to be completely neutral to them. It is just like another random Tuesday in your life. So winning doesn't mean that it's going to stay there, and losing, it doesn't mean that you're going to be doomed forever. So when you have this mindset with you, it doesn't matter if it's going to be after you're losing or winning, after results, aftermath of the entire process, or it's before that. You're not going to be that much emotional. You're not going to be under that much or amount of the pressure when you're doing the trading. And I think that was one of the wisest things that I could have ever implement on my own life as well, because everything is going to be only a game, and it's never gonna last, and this shall pass as well. So that's really good. Thank you so much for the answers. I want to have only one moment. This is going to be the last question. Thank you so much, everyone, for being there and listen to us. I just enjoyed this conversation completely. Just to come up with the relevant question that one of our users asked us was that, okay, could we connect any World Cup moment that mirrors a classic trading mistakes? And that's the last question.
I can't.
The hard one, right?
Definitely. So on the spot, I can't really think of one that comes to mind. I would say definitely one of I think it was Ronaldo that scored the header.
Yeah.
Where he lunged almost a meter in the air and kind of shot that amazing header. So that is a good example of a person who's disciplined, a person who trains a lot, a person who's been skill building, and to be able to perform in that way under pressure, to think very quickly. If you look at the statistics of that trade or that position, there were around 4 defenders around him when he took that shot, and I think it was a corner kick or something like that.
Yeah.
So and even the goalie came out to try and anticipate it. It was an impossible shot, and I think only something like that is not pure luck, and trading is not pure luck. Trading is skill. Trading is hard work.
Correct.
It's learning to kind of perfect. It's building the skill set. It's identifying patterns. It's really a skill set of pattern recognition, risk management, and a portfolio strategy, setting a day plan and committing to the habits that traders have that will ensure that they become profitable. It's a hard market. It really is. And, this profession isn't for everyone, but the people who get into it kind of develop the habits, and it becomes their lifestyle, and they excel at doing it because they've trained so hard to be ready for market conditions.
Perfect, perfect. Thank you so much for this amazing conversation, Michael. You know how much I always enjoy the conversations we have together. And this is for our users. Please do your own research, understand the risks, make decisions based on your own risk tolerance, and see this session as the educational sessions only, and do your own researches. And remember that the replay of today's session will be live tomorrow on YouTube. So follow us and get the proper details of this entire processes and discussions that we have from our channels, media channels. And thank you so much, everyone. And thank you so much for watching. Take care.
Bye, Azzy. Bye.